Okay, welcome to ProcessTrading.com for day trading the S&P 500 E-mini futures with the inflection point trade system. It trades in TradeStation, so let's go over and look at the indicators here. The system uses a specific trade management technique where you buy into strength and sell into weakness, and that technique is covered in a separate video. The system itself is comprised of several indicators. It has two oscillators here and here. This one is the range oscillator, and it calculates highs and lows, pullbacks, points, and trends. And this is the inflection oscillator, and it calculates pretty precise high probability price turning points. Then it has the histogram here, which is the energy indicator that calculates the strength of the price movement. And lastly, it has the RTM line, which is the regression to the mean line that is associated with price timing alerts. And that has also been covered in a separate video. And so this will be the third of 5 main videos, and then the final video will be looking at all the systems together. So this range indicator we won't be talking about today, so we can just turn that off. We're going to be talking about this one. We've talked about that one, and we talked about this one. I'll leave those on because clearly the power of the system is using all the indicators as a whole. So, and the main thing is it's just all about knowing what price is going to do. That's really what, as traders, we're after. So the inflection oscillator, which is probably the heart of the system, really, is an oscillator. So it has an upper limit and it has a lower limit. Then it also has two lines in it. It has a tricolored momentum line here, and then it has a dashed inflection line here. It also has a midline, which is also significant here. The inflection line swings from high to low, and I'll see if I can get that for you. Oops, let me see if I can pull that over. You can see its nature is for it to swing from high to low. In an uptrend, when price is in an uptrend, as it was yesterday, then you'll see this high to low all stay within the upper half of the oscillator. So it's giving you very significant information and pretty precise signals. So the uptrend can more or less be have evidence or be confirmed by the inflection line only falling to around the midline and not going down. But eventually, no matter even if it's in an uptrend, eventually it will swing high to low. So that sets up short and long-term expectations as well. In a downtrend, is just the opposite is true. The inflection line only rises to the midpoint and then comes back down, and that's kind of more evidence that you're in a strengthened downtrend. So the normal price cycle, as we just went over, really is it swings from high to low and even touching the lower limit. This is what is the normal occurrence in a price cycle, if you will. When the inflection line is above the upper bound or the upper limit, price is extremely stable. And let me see if I can get that for you here. Got it. Let me see if I can move this here. here you see the inflection line as it rose. It came up through the midline and crossed over the upper bounds, and see how it's oscillating a little bit, but it's oscillating and it's staying above this upper bound. When it stays above that upper bound, the upward strength movement has a lot of strength to the upside, and it's an extremely stable trend upward. And you can tell that because of the position of the inflection line. When the line is, of course, at the lower bound, when it's down here, and I'm not sure if we had that. See, this was a trending day. It was trending up. It only gets down to the midline. It oscillates, to the midline and goes back up. Yeah, eventually it comes down here because that was a kind of a downtrend. It cut through the midline and came down. So some of the things that you have to be aware of is also the slope of the line. So this is a nice downward slope right here. And you can tell, here's price, the high of that is 27.50. And let's just pick it up right here. That's 16.25. So it's 11 and a quarter points. So it doesn't look like it on my screen, I suppose, but that's a nice little downtrend, and it's indicated by price coming here. And one of the crucial points was when price did not come down to the midline and bounce back up, but continued its slope down through the midline, heading towards what we expect is towards the lower limit, which is a normal price cycle there. So when price is sloping down, it's going to show signs of weakness, and when price is sloping up, it's going to show signs of strength, just like here, just like it's doing here, and price is starting to go up. Let me move the screen a little bit here. So the inflection line is accompanied by this tricolored momentum line. And the momentum line generally oscillates from above the upper limit to below the lower bound. As the momentum line oscillates, it will change color. As it oscillates, it's going to change color in reaction to price. So if price is moving up, then the momentum line is going to be green, because this is a momentum line of price, really, is what it is. And if price is moving down, then the momentum line is going to be red. The thing that distinguishes this momentum line is when it's considered overextended, and that's an internal calculation, it turns white. And you can see that it said, well, it's green here, price is going up. Now, you wouldn't think that that's an overextension, but this kind of indicates it is, and you can see that it rolls over. We have the same thing to the downside here. This is a overextended condition for red, which is the downside, or downward movement in price, and it's overextended, and we can see that here it goes back up. The indicator also has this midline, and when either the momentum indicator or the inflection indicator cross through the midline, it's a strong indication for the sentiment of price. And we can see here, the momentum line crossed the midline right here, and the inflection line crossed it right here, right here. So one's catching this and the other is catching that. But really, the extremely highly predictive power of the inflection oscillator is shown by reading the two lines together. Whenever the momentum line crosses through the inflection line, price tends to continue and move in that direction. And we'll see it's crossing up here, and price goes up. It's crossing down here, and price goes down. Let me give you some more examples. I mean, it's very reliable. It's crossing down here, basically, and then price comes down right here and continues down a little bit. Some of these, this was pre-market and stuff, so, you know, that's, it still works there, but it's better to read it during the market hours. Okay, so we're over here in the market hours, and we see it crossing up here, and price goes up. We see it crossing here, and price goes down. So whenever the momentum line crosses through the inflection line, price tends to continue in that direction. Now, when the momentum line and the inflection line are read together along with their position in the oscillator, the probability of predicting a trending type move is increased. For instance, let me move this over a little bit. Let's see where we're at. Okay, let's take a look right here. For instance, if the inflection line right here, which is really their primary read, you start off reading this, and then you continue to read the momentum line, the oscillator as a whole, and then all the other signals. And the momentum line, when they're both at the upper limit or above the upper limit, and the momentum line cuts down through both the upper limit line and the inflection line, the probability rises significantly for that to be a larger downtrend, more than just taking a point. When you put on that trade, you might want to, expect to have more than just a point on that. You know, it could be a major, or it could be a minor or a major trend down, but there's more probability when they're both at the upper bounds, and we know that it swings from the upper lower. You'll have more of an extended trend. And of course, the opposite is true. Let's see this over here. The opposite is true when you have both the momentum line and the inflection line down towards the lower limit, and the momentum line cuts up through the lower limit, and it cuts up through the inflection line. Let's see what point that is. That's at that point right there, and we see that now with their trade management technique, you can stay into it up to here, because that is what we're expecting. That's what we're anticipating up here. And as you manage your trade and get into price, you actually could, even if you got into this at the high, which is 1625. Let's see what this is. 1625, 1775. So that's a point and a half right there. Even if you just did that, but you're expecting more of a trend there as well. So you actually could take your point and a half and re-enter here and stay in for this duration. But the real point is the predictive power of when the momentum line crosses through the inflection line, and then of course their position within the oscillator itself. So that's good for telling trends and stuff like that. So to read the inflection oscillator, the first thing you're going to observe is the inflection line and its position within the oscillator and its slope. Okay. The second is observing the momentum line, its slope and its color, and where it is within the oscillator, above or below the limits and stuff. And the third, of course, is reading them together. So this is a central indicator to the inflection system. And even though that it is the central indicator and powerful, you want to read it in conjunction with the rest of the system, because it's using the system as a whole, including the trade management technique, which altogether keep you on the right side of the trend and let you buy into strength and sell into weakness. The other indicators we've talked about so far are the RTM line, the regression to the mean line, and the energy indicator. So next we'll cover the range indicator, which is the one that I took off earlier. That'll be the last one. That's the last indicator in the system. And if you're interested in any of this, you can go out and find more of it on processtrading.com. So thanks for watching, and I hope you catch the next video.